Hi everyone, Chris here from SMCFX. I'm just going to do a quick breakdown of a trade that we took on the 7th of September live within the Discord trading community. And this is a trade that we were streaming our charts live. We were explaining the thought process of why we were looking at taking a trade from this area, and we'll also have a look at the outcome of the trade. So this trade was a 10.9R trade. So essentially after London Open, we had a push up into our zone and we've targeted the lows of Asia. So what we're going to do a breakdown of the thought process behind this trade and why a specific target was set. So to start with, we've got our Asia highs, we've got our Asia lows, okay, and we're now approaching the time period of where London will be opening. Okay, so at this point, this is where we're on the charts. We're looking, anticipating where we're going to be looking to take a trade from. So first off, the first zone that we had of interest was this one. Now this particular zone, the supply zone, order block, whatever you want to call it, this immediately caught our attention as a zone that quite a lot of SMC traders would likely be targeting. Reason for this is we've got a very impulsive move. We've got a bit of structure broken here as well. And if we zoom out a little bit, we've also got this point here, which is also a break. So this area stood out like a sore thumb to us. This is the sort of area that we don't like trading from because it's too obvious. It would be very easy to have a limit order set here and price would just smash through and take us out as liquidity. And this is a common thing that's happening more and more often these days. The more popular that smart money concepts becomes, the more likely zones like these are going to fail very easily. For that reason, we won't be interested in taking a trade from here. Now, what we tend to do is when we find a zone that looks like a very common place for SMC traders to be trading from, we then look above. We look above this area to see, is there a zone that could get mitigated if this zone fails? So what we did, we had a look at this point here. Now this entire area was a bit of a range, and as you can see from here, we've had a bit of consolidation, and this is around about the swap hour. So initially we're looking at taking a trade from the high of the Asia, okay, but what often happens is as London opens, you'll likely see that the Asia highs or lows tend to get swept quite frequently. So this is the point that we're looking at. And we do also have a zone around here, so we can see this last buy before this push down. What we are concerned about is this swing point here, that this eventually does get broken. And as you can see, this is the most recent zone that has broken this. And this is going to be an obvious place for a lot of SMC traders to trade from. Okay, we then got the POI that we've got of interest within the Asia high. But as we understand, Asia high could likely get swept. And if that happens, I think this would be the next point that we could be looking at for a potential sweep. Now, we could mark this zone out, but essentially what we're looking at is we've got our trap zone here where people are likely going to rush into the markets. We then got this zone. So if we do get a sweeper tap into this, we could then look to market execute. If we don't get a full tap into this and a push further down, this is when we look to take a market execution and get into the trade. So I'm going to advance price forward slightly. Okay, right, so price is pushed in here. We've pushed straight through our trap zone. Now we've had a mitigation of this zone. What we'll do, we'll drop down to the 1 minute time frame. We can start having a closer look at how price is reacting to this area. So at this point, we wouldn't have a limit order on. What we would be looking for is to see a little bit of commitment to the downside. So at the moment, we've now left some imbalance in price or fair value gap, whatever buzzword you want to use to describe what this is, but we've got a reason for price to come back and rebalance this area. So this is one confluence that will go in our favor when we do eventually get into the short trade. And as you can see, we've had a similar sort of price action on this side as we've had this impulsive push down. We've then got the imbalance on this side. As you can see, this price action here has come to rebalance this along with any liquidity that's been left within these highs. So from here, we're just going to advance the candles one by one. And as you can see, we've then had a push through. We have mitigated this zone. And after we've mitigated this, price is just wicked back and we're starting to push away. So this is the point where we would then be looking to take a trade from. We'll be looking to enter on an engulfing candle. So at this point, once we've had this engulfing candle completely engulf this previous candle here, at this point, we'll be then getting our trade ready. So by the time I had actually got the trade activated, we managed to get in at a price of around 15.2. So we went at around here, and I had a 5 pip stop loss for this. Now, you'd notice that I haven't actually got my stop loss above this high. Reason for this is if price does come back up to this area, there's a very good chance that now this zone has been mitigated that it will fail. So if price comes back up towards this high, there's a very good chance that this trade won't work out and we can move on. So if you advance candles further on, as you can see, price is pushing down. So it was around here that as I press the sell button, this is where my order has got filled, and we've then added our 5 pip stop loss. Now from here, as this trade was setting up, I've already had a target in mind. So if we zoom out just ever so slightly, we've already had a sweep of the Asia high. We've tapped into this. We've also got this other zone here that we was interested in, okay, which all it did was wick through here, and now it's showing some interest in pushing back to the downside. So like we said, we've got some imbalance here. So we've got this that will give us a reason for price to continue further down for a period of time. So at this point, what I'm then looking at, I'm looking at, is there any reason for price to keep pushing down? Now we could look at liquidity, something like this. We could see potentially some trend line liquidity, something like this. Again, liquidity is a very subjective topic. So I could have my liquidity marked up like this. I could then have liquidity marked up as, you know, these low points here that I'm expecting to be swept. But the overall view that I'm looking at is if we do have trailing stops above these, below these lows, then there's a good chance that these are going to be taken out as liquidity. We've got a little bit of imbalance around here, a little bit around here as well, which as you can see, it's actually been filled up here. So we have had this impulsive nature, and we've also got an unmitigated demand zone around here. So the reason I'm looking at this particular candle as the demand zone, okay, we could look at the very last push, or, you know, strictly speaking, I know a lot of people would then say, no, we need to look at the last sell before the buy. I think with this example, I'm looking at the last candle before the actual impulsive movement, and this is where I'm going to look to take my target. So from here, we'll push this out, we'll drag this down. So my target was about 10.9 R. As you can see, is just shy of this zone. So whether you've got this target there, or whatever, it doesn't really matter. We're targeting just shy of it. I don't want to have my target inside it, because if we don't get a deep enough push into this area, then our take profit may or may not activate. So I've left it just shy, so that if we do get a mitigation of this zone, there's a higher chance that our take profit will actually activate, depending on the spreads. So let's advance price forward. Let's see how this plays out. Now what we've got going on here is, if we look at this, this is also another area that we could look at a potential trap zone. So we can either use the 5-minute chart for this. We drop back to the 1 minute. We've got this range of candles, whether we could even look at refining it to the very last sell before the buy. Okay, and as you can see, price is tapped into it, it's wicked slightly below, and we're having a subtle reaction from this. We have had a little bit of a reaction. So if there was any traders taken along from this point, if they haven't been stopped out by this wick, then they could be in profit for a little while. They could then maybe have stop loss to break even, depending how long or how aggressive they are with setting their stop losses. If not, they could potentially have been taken out at a full loss if price continues further down. That's providing they haven't been taken out by this wick to start with. But if they have been taken out by this wick, another thing to look at is when this happens, it wicks, takes out their stop losses, price pushes up, and this is where a lot of FOMO starts to get in for some traders. So they see the price is pushing up and they think, oh no, that trade was going to go in my favor. And they'll either look to re-enter on either this candle, or they might even take a market execution somewhere up here, because they think they're going to miss this move up in the original direction they were looking to trade. And then this happens. Price keeps pushing down. So this zone here to us is quite a clear trap. This was a zone that we was anticipating. Once this gets broken, we would look at getting our stop loss to break even. So we continue further down. So we have now had candles closing below this zone. So at this point, we would look at getting our stop loss to break even at this point now. Continue pushing price further down. And here we are, volumes kicking in, we've had a push down. We were coming close to our TP around this area. We've then had a pullback, okay. And essentially what's happening with this pullback, right, we've had this impulsive push down here, prices come back up. We've come up to a supply zone here. So we'll keep advancing forward. And there we go. Prices come into our demand zone, and this is the reason why I have my target just shy of this area, okay, because it's given us enough room with your spreads. So if price didn't come all the way into this area, okay, we could have just had a tap on the edge. And if your spread is any wider than half a pip or anything, depending on your broker, it just gives you that little bit of wiggle room to actually take TP, and it requires less monitoring of the trade, because once you've got your TP set, you've got your stop loss to break even. I'm not sitting here in front of the chart staring at this all day. I'm off going off doing my own thing, getting on with my day. If it hits break even, doesn't matter, isn't a loss. If it hits TP, even better, I've made some money. So this is why I have my TP just shy of the area, so it gives me a better chance that my take profit is actually going to be activated. Now, moving on from here, as you can see, the trade has hit take profit at 10.9R. From here, we can then see, let me just speed price up a little bit. You can see price keeps pushing even further down. Now, as you know already, I did take full take profit here. That was a full closure. But what some people would then be looking at is, oh, price has come all the way down here. I really wish I held on to that trade, or I really wish I did this. I really wish I did that. Thinking like that can be quite detrimental to your trading. Now, if you think about, I'm happy that I've taken full profit here. I could have closed 80% volume, left the rest to run. And on some trades, I do actually do that. This particular trade setup, because this wasn't actually a higher time frame setup, it was more of a mid time frame, I wasn't keen on doing that. So that's the reason I've taken a full TP around here. If it was a higher time frame zone, like a 4 hour or anything like that, then I would have closed maybe 80% trade volume somewhere around here, maybe a little bit higher, maybe about 5 hour or even 10 hours, something like that, and leave the rest to run. And if that last remaining 20% volume comes back, hits break even, doesn't matter. But if you do get a situation like this where you have a take profit and you can see prices pushed all the way down, just leave it. Some people would then look at it and think, oh, I could have squeezed some more profit out, and they might then try and take another short, try and catch more of this movement before price actually pulls back up, and they start revenge trading or trying to catch moves that they shouldn't really be in. So guys, that's a quick breakdown of the pound US dollar trade that we took on the 7th. We did also take an Aussie US dollar trade on the same day. That'll be in another video coming up shortly. So hopefully you found this useful. Feel free to drop any questions or comments in the comment section. But for now, have a great day.